Money is a tool that can either work for you or control you. The difference between those who struggle financially and those who build lasting wealth isn't just about how much they earn, it's about how they manage, invest, and grow their money over time. The financial landscape is shifting rapidly, and if you don't understand how to adapt, you'll be left behind. The old advice of saving money in a bank account, relying on a stable job, and hoping for retirement security no longer guarantees financial success. Those who recognize the new money rules and take action are the ones who will thrive in the years ahead. One of the biggest financial mistakes people make is relying on a single source of income. Most people depend entirely on their job for financial stability, but this is one of the riskiest approaches to wealth. If your job disappears tomorrow, how long could you survive? The wealthiest individuals don't just have one source of income, they build multiple streams that continue generating money, even if one dries up. Side hustles, investments, real estate, and digital businesses have become crucial for long-term financial stability. The key to financial independence isn't necessarily making more money from a job, it's creating systems that generate money even when you're not actively working. Another major wealth building strategy that's often overlooked is understanding how inflation erodes purchasing power. Most people assume that saving money is the safest thing to do, but the reality is that holding too much cash is actually losing you money. Inflation means that every year the same amount of cash buys less and less. If you saved $10,000 5 years ago, that money no longer has the same buying power today. To combat this, smart investors put their money into appreciating assets, stocks, real estate, businesses, or commodities that grow in value over time. The difference between those who struggle financially and those who build wealth isn't just about income. It's about what they do with the money they earn. The stock market has been one of the most powerful wealth building tools for decades, yet many people avoid it due to fear, lack of knowledge, or bad past experiences. The truth is, most people lose money in the stock market because they treat it like gambling rather than a long-term strategy. Investing isn't about quick wins, it's about consistent growth over time. The most successful investors understand market cycles and stay invested even during downturns. Historically, the stock market has always trended upward over the long run, meaning that those who stay patient and invest regularly see their wealth compound over decades. Real estate is another key financial strategy that wealthy individuals use to build passive income and long-term wealth. Many people assume that investing in real estate requires a lot of money, but there are creative ways to get started with minimal capital. House hacking, for example, allows individuals to purchase a multi-unit property, live in one unit, and rent out the others to cover mortgage costs. This strategy not only provides a place to live, but also generates income that builds wealth over time. Even if buying property outright isn't an option, real estate investment trusts or fractional ownership platforms provide opportunities to invest in real estate without the need for large upfront capital. One of the biggest financial challenges people face is debt. While some forms of debt, like mortgages or business loans, can be leveraged to build wealth, high-interest debt, such as credit card balances, is one of the fastest ways to lose financial security. The average person carries thousands of dollars in high-interest debt that keeps them trapped in a cycle of financial stress. Eliminating high-interest debt as quickly as possible frees up cash flow that can be redirected toward investments and wealth-building strategies. Understanding the difference between good debt and bad debt is essential for long-term financial success. A critical yet often ignored aspect of financial success is tax strategy. Taxes are one of the biggest expenses people face over a lifetime, yet most individuals overpay simply because they don't know how to minimize their tax burden legally. The wealthy take advantage of tax deductions, tax-advantaged accounts, and business structures that allow them to pay significantly less in taxes while keeping more of their income invested. Strategies like contributing to retirement accounts, taking advantage of business tax write-offs, and structuring income efficiently can save thousands of dollars per year. Money that can instead be used to build long-term wealth. Another major factor in financial success is understanding how money flows in the economy. The financial system isn't designed to make the average person wealthy. It's structured to benefit those who know how to use it to their advantage. The biggest corporations and investors don't just work for money, they make money work for them. They use leverage, investments, and tax strategies to maximize their financial growth, while most people simply work harder for more income without actually increasing their net worth. Learning how money moves, where opportunities exist, and how to structure your finances properly is the key to breaking out of the paycheck-to-paycheck cycle. Financial education is the foundation of wealth building, yet it's something that most people never focus on. Schools don't teach personal finance, and unless you take the initiative to learn, you're left figuring things out through trial and error. The wealthiest individuals never stop learning about money. They read books, follow financial trends, attend seminars, and surround themselves with people who understand how to grow wealth. If you're not actively improving your financial knowledge, you're at a disadvantage. Understanding financial principles gives you the ability to make smarter decisions, avoid common mistakes, and recognize opportunities before others do. One of the most overlooked aspects of wealth building is time. Many people delay taking financial action because they believe they have plenty of time to figure things out later. However, the longer you wait to start investing, building multiple income streams, or eliminating debt, the harder it becomes to achieve financial freedom. Time is the most powerful asset in wealth building because of the way compounding works. The earlier you start, even with small amounts, the more wealth you can build effortlessly over time. Those who wait often find themselves playing catch up, trying to compensate for years of financial inaction. The rise of digital finance and decentralized assets is another major shift happening in the economy. Cryptocurrency, blockchain, and decentralized finance are changing how money is stored, transferred, and invested. While traditional finance still plays a major role, digital assets are offering new ways to build wealth outside of the traditional banking system. Understanding how these technologies work and how they fit into a broader investment strategy can provide an edge as the financial system evolves. One of the biggest financial myths is that wealth is only for a select few. The reality is that financial success is available to anyone willing to learn and take action. There are countless stories of individuals who started with nothing and built significant wealth by making smart financial decisions. The biggest difference between those who succeed and those who struggle is not intelligence or background, it's mindset and execution. Those who believe that financial success is out of reach will never take the steps necessary to achieve it. Those who take responsibility for their financial future, educate themselves, and take consistent action will always be in a better position. A key aspect of financial success is surrounding yourself with the right people. Your financial habits, mindset, and knowledge are heavily influenced by those around you. If you're constantly surrounded by people who struggle financially and have a negative outlook on money, it's going to be much harder to build wealth. On the other hand, if you surround yourself with successful, financially educated individuals, you'll naturally start adopting better habits and making smarter financial choices. Networking with people who understand wealth building can accelerate your financial progress and open up new opportunities. At the end of the day, the most important factor in financial success is taking action. Many people spend years learning about finance, reading books, and planning for the future, but never actually make moves. The biggest financial mistake you can make is waiting too long to start. Whether it's investing, eliminating debt, or building additional income streams, the most important step is the first one. Every day that passes without taking action is a missed opportunity. The sooner you take control of your financial future, the better positioned you'll be to build real wealth and create financial independence. Money is a tool, and those who learn how to use it effectively will always be ahead. The economy will continue to change, but the principles of wealth building remain the same. Invest wisely, build multiple income streams, minimize financial waste, and continuously expand your financial knowledge. Those who adapt, take action, and think long-term will always come out ahead. Money is a tool, and those who understand how to use it effectively will always have an advantage. The challenge is that most people were never taught how to manage or grow money properly. They work hard, save a little, and spend the rest hoping that someday they'll have enough to retire. But in today's financial landscape, that old formula no longer works. Inflation is rising, wages are stagnating, and the cost of living is higher than ever. Without a clear financial strategy, it's easy to fall behind. The only way to stay ahead is to learn how wealth is built, sustained, and multiplied. One of the most overlooked aspects of financial success is the ability to think long-term while acting in the short term. Many people focus too much on immediate comfort rather than considering how their financial choices today will impact them in 10, 20, or 30 years. Wealthy individuals think in decades, not months. They make financial moves that may not pay off immediately, but will create significant wealth in the long run. This long-term mindset allows them to see opportunities that others miss. A key part of this strategy is learning how to turn earned income into passive income. Most people focus on increasing their salary, which is important, but unless that money is used to acquire income-generating assets, they will always be trading time for money. Passive income allows you to separate your earnings from your effort. Investments in rental properties, dividend stocks, automated businesses, or intellectual property royalties can all create cash flow that continues to pay you without requiring direct labor. Another major wealth building principle is understanding how to leverage other people's money and resources. The wealthiest individuals in the world don't just rely on their own money to invest, they use financial leverage, partnerships, and business strategies to multiply their impact. A prime example is real estate investors who finance their properties with bank loans, allowing them to control a large asset with a small down payment. Entrepreneurs use venture capital or business credit to scale their operations faster than they could with just their own savings. The key is knowing when and how to use leverage safely, ensuring that borrowed money is working for you rather than putting you at risk. One of the biggest financial shifts happening right now is the rise of automation and artificial intelligence in wealth creation. AI is changing the way people invest, build businesses, and generate income. Robo-advisors are now managing investment portfolios with precision. AI-powered businesses are running autonomously, and automation tools are allowing entrepreneurs to scale their ventures faster than ever before. The people who embrace these changes early will benefit the most, while those who ignore them will find it harder to compete. Another crucial but often neglected financial strategy is creating a personal economic moat. In business, an economic moat is something that protects a company from competition, like strong branding, exclusive technology, or market dominance. But individuals can also build their own economic moat by diversifying their skills, income sources, and investment strategies. The more valuable you are in the marketplace, the more resilient you are to economic downturns and unexpected financial crises. A major financial mistake that many people make is underestimating the impact of small financial decisions over time. It's easy to focus on big wins, landing a high-paying job, making a successful investment, or getting a promotion, but small daily habits have an enormous impact on financial outcomes. Avoiding unnecessary fees, reducing wasteful spending, negotiating bills, and investing small amounts consistently can add up to massive wealth over decades. Every financial decision, no matter how small, compounds over time. One of the most powerful wealth building tools is learning how to read and interpret financial statements. Many people invest in stocks or real estate without truly understanding the numbers behind their investments. Understanding income statements, balance sheets, and cash flow reports allows you to make more informed financial decisions. Wealthy individuals don't rely on luck. They make calculated moves based on data and financial analysis. Even for personal finance, tracking your own financial health like a business, monitoring income, expenses, liabilities, and assets can be a game changer. Another overlooked strategy in building wealth is understanding liquidity and accessibility of funds. Many people lock up their money in investments that they can't access when needed. While it's essential to invest for the long term, it's equally important to have liquid assets available for opportunities or emergencies. A balance between long-term investments and accessible cash ensures that you can act quickly when financial opportunities arise. An important factor in financial success is location and lifestyle design. Where you live has a direct impact on how much you can save and invest. The cost of living varies significantly between cities, states, and countries. Some people are able to accelerate their wealth building by moving to lower cost areas while maintaining the same level of income. Others choose locations with business-friendly tax policies that allow them to keep more of what they earn. The ability to relocate strategically is an underrated financial tool that can provide massive advantages. Another essential financial habit is understanding economic indicators and market trends. Smart investors pay attention to interest rates, inflation, employment rates, and government policies to anticipate market shifts. Being aware of these macroeconomic factors allows you to make proactive decisions rather than reacting to financial changes after they happen. Those who understand how to interpret financial trends are always ahead of those who wait for the news to tell them what's happening. A critical mindset shift for financial growth is focusing on assets over liabilities. Many people prioritize lifestyle upgrades, buying luxury cars, expensive clothes, and extravagant vacations before securing their financial foundation. While there's nothing wrong with enjoying life, financial freedom comes from prioritizing income-producing assets first. The goal should be to have your assets pay for your lifestyle, rather than using active income to cover unnecessary expenses. One of the best financial advantages you can give yourself is learning negotiation skills. Almost everything in life is negotiable. Salaries, real estate deals, interest rates, business contracts, and even day-to-day expenses. People who know how to negotiate effectively save thousands of dollars a year, while those who accept prices and terms as they are often overpay. Developing the confidence and skill to negotiate is a major financial advantage. Another critical aspect of financial success is building a personal financial ecosystem where everything you do contributes to growing your wealth. This means aligning your job, side hustles, investments, and even your social network in a way that reinforces financial growth. Wealthy individuals don't compartmentalize their finances. They build an integrated system where money flows between different opportunities, creating multiple points of leverage. An underappreciated financial strategy is developing the ability to evaluate risk correctly. Many people either take too little risk, missing out on wealth building opportunities, or they take excessive risks without understanding potential downsides. The best financial decisions come from a balance of calculated risk taking and protective strategies that minimize losses while maximizing gains. Understanding risk and reward is fundamental in everything from investing to career choices. A critical factor in financial success is avoiding unnecessary financial commitments that restrict future flexibility. Many people lock themselves into long-term car loans, mortgages, or business expenses without considering the impact on their ability to adapt to future financial opportunities. Keeping fixed costs as low as possible while maximizing income allows for greater financial agility. Another underutilized financial principle is optimizing for time rather than money. Many people focus solely on earning more money without considering how their time is being used. The wealthiest individuals build systems that allow them to earn more while working less, freeing up time to pursue bigger opportunities. Learning how to delegate, automate, and scale income sources is the key to long-term wealth and financial freedom. A final yet crucial part of financial success is building a wealth legacy. True financial success isn't just about making money. It's about ensuring that wealth continues to grow and benefit future generations. Setting up trusts, proper estate planning, and teaching financial literacy to the next generation ensures that wealth isn't just accumulated, but sustained over time. Financial success isn't about luck or background. It's about knowledge, strategy, and execution. The economy will continue to evolve, and those who are prepared will always be ahead. The key is to take action, continuously learn, and adapt to financial trends before they become mainstream. The people who succeed financially are the ones who take responsibility for their wealth journey and make intentional choices every single day. At the end of the day, the most important question is, are you actively shaping your financial future, or are you letting circumstances dictate your financial reality? The choice is yours.